Hey everybody, it's Bob and Phil, Trade Genius Podcast. We're going to talk Bitcoin today. I know everybody's hot and bothered for the halving and for Bitcoin to start ripping, but we want to pull in the reins a little bit. We're kind of explain why and when we think that rip's going to happen. So stay tuned.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. So Phil, everybody's ready to go. 100,000, 200,000 Bitcoin, buy the Lambo, sell the cottage, move to Tahiti, but I don't think we're quite there yet. Do you want to kind of walk people through why?
Yeah, so let's go take a look at a couple of charts here. Actually, we're going to go through a few charts, and we're going to talk about, let's first talk about what everyone's expecting. Everyone's expecting us to basically follow the typical halving cycle. So this vertical line here kind of represents where we are. And if you model this based on our last high of 67,549, and you take the typical halving cycle rotations, it's projecting 280,470 on the next cycle peak. And that would imply that the cycle lows are in, and if this plays out, we pull back a little bit here and we kind of put in this inverted head and shoulders type pattern, which I would agree would be your typical scenario. And then you're going to get a pre-halving bump, kind of like what we had in 2019. And then you pull back and then you get ready as we get into 2024. That's the last place to buy a dip, basically. I think this model is a little bit skewed because of the COVID crash on the last cycle, but otherwise, I don't think that dip would be there. But more or less, you pull back, you hold like the 1 year or the 4 year moving average because of the 4 year cycle. And then you move up into the halving. So everyone's looking at that and everyone's calling for the low to be in. The big problem that we have with that is that this macro cycle or this halving cycle is going into a macro environment that Bitcoin's never been through. And what we mean by that is the yield curve. So yield curve inversions are pretty bearish, at least prophetically. They usually imply that a recession is coming. We just went to another new low on the yield curve today, down to negative 1.08%. You're going to be hard pressed to find that anywhere in history, a yield curve that inverted. So you can see where the yield curve inversions really took us down back in the dot-com boom and then the great financial crisis. And then we've largely been escaping a recession because, the Fed just stepped in with a lot of liquidity. And you can see even with the S&P 500 chart how just pinned it was to just grinding higher. Very little two-way movement until we get into these areas where the yield curve starts to get inverted. And then you'll notice there's a much different market tone where there's more two-way trading and the moves are much more violent to the downside. Now, the thing is about the yield curve is that the real move down doesn't usually start until the yield curve starts to normalize. And it usually takes a year up to 2 years for the yield curve to normalize. So that's why I'm saying that because Bitcoin's tied to risk on, because it's tied to the dollar, and the dollar is going to be very much sensitive to what's going on here with the yields, you're going to probably be at the mercy of what typically happens in these markets. So, this chart here, we just kind of overlaid what we would typically see in a bear market once this yield curve starts to normalize. This would say we're pressing down as late as fourth quarter of 2024, okay? So while people are thinking you're going to be rallying into the halving, you might still be basing into the halving for the first time and then rally afterwards. So you want to be mindful that we could potentially not really get that halving rally till well after the halving and maybe October, November of 2024. So just that's one scenario if this plays out. So you have to be open to that. So with that being said, we kind of want to take a look at what kind of drives everything again. And this is the liquidity chart. However, this time we're just looking at Bitcoin relative to liquidity. Now this is zoomed out. This is a 1 week chart, and I tried to encompass the entire price range of Bitcoin. Now, mind you, this entire area is after the great financial crisis. So our previous yield curve happened back here. Okay, Bitcoin wasn't around. So Bitcoin's, comes into existence, the big inflation hedge instrument, right? and it's enjoying a really bullish market. And for the most part, the Fed was easing through a lot of this. Okay. So as the markets rose, so did Bitcoin, but Bitcoin did more so because it's so finite, and it'll continue. Don't get me wrong. It's going to continue to do that, but we have to be realistic about the cycle. So what happens here, what you'll find is that I measured fair value. Okay. So we talk about fair value, and we know the markets are extremely overvalued right now by about 350 points on the S&P 500. Bitcoin typically will stay under the fair value in a bear market environment. And you notice we just hit that over here, right? So we just hit fair value. So we're kind of looking at that as resistance, and 25K on the chart was resistance anyway. What we want to focus in on is when we start to gyrate back to this accumulation zone. We don't know exactly what the price of Bitcoin will be because it's a relative value compared to how much liquidity is in the system. So if everything being equal, let's say liquidity doesn't move and Bitcoin drops back down, let's say $8,000, that would be a big time buy. Okay. So, but that's going to imply that we're testing back down to the lows. So liquidity won't stay up here. Liquidity is likely going to come back down because the Fed's got to let the air out of the tires, or at least that's what they're saying. And they're going to try to do that as long as possible until something breaks in the market, and then they'll have to stop doing that. But let's just say they try to get back down to the pre-COVID lows. Then realistically, you got to look at Bitcoin maybe taking out these lows that everyone's counting on holding because they're looking at the cycle in the same way that all the other cycles have been. But as you can see, this macro environment is not really conducive to that. So if we zoom in more to today's action, you'll notice we have a diamond top going in. We actually diamond topped up at 60K. So these diamond tops are bearish, and we're starting to break out of it here. So if we can't get a push back up into this area, we could be falling out of bed here. So what I'm looking at, what I think is going to happen is we're going to fill this gap on the CME chart. So the CME futures don't trade over the weekend, and they create these price gaps when Bitcoin moves up on the weekend. And futures matter in the price of Bitcoin. It's a big hedging instrument, the CME futures. So we're going to be probably pulled back to this gap to backfill that, because what happens is there's an inefficiency here in price, and sooner or later the algos like to go back to these areas and backfill that inefficiency. So we'll probably get a back test of 20K. And then, what we were looking for ideally, I can zoom out on this a little bit. Let's just say that head and shoulders of the halving cycle, holds up. Then if really we're going to hold true to the halving cycle and just, let's just say this Bitcoin disregards the macro, we really don't want to get below this black line, which is going to be around that 18,000 level. So about 18,300 on spot. So that's going to be what I would be looking at if we pull back. If we start losing that level, then this entire range that was put in down here is going to be opened back up, and you're going to go and attack the lows. Okay. So that is the big picture here as we move through the year. Now, if you look at the kind of the current action that I look at, this blue line here is the 144 simple moving average on the daily. If we're really going into like a new bull market, we should not come back under this. So if we do come back under this level, which is about that 20K area, just under, it's about 19,663 at the moment, but that's going to rise up. So let's just call it like 19,800 by the time it meets up with it. If we break through that, then you have to look at, okay, something's, this bottoming cycle is not working. And then you're going to have to be very careful. And that 18,300 level becomes really important. And then you're really going to want to keep tabs on that daily moving average there, because for me, that's the difference between a bear market and a bull market. The other one too, where you kind of see bear markets rallies kill, is a moving average I don't really talk about too much, but this is like where it kills bear market rallies. It's the 377 EMA. And that moving average is exactly where we topped out at and we rolled over. So if we're really going to get off to the races, let's say we're trending later, if we start breaking over that later on, maybe not this year, but into next year, that's a level that to me would be like, okay, all systems go, let's get on with the halving pump. So right now, the two levels I'm looking below, this lower line is it's a moving average envelope. So it takes a percentage of the weighted moving average 20, and we project out percentages, positive and negative. And so usually in this scenario, we always get a move back to the bottom of that band. So the first level we're looking at is that 20,800 area. Well, if we break through that, we're going to look at backfilling that gap at 20K on the CME futures. And then below that would be 19,660 to get back to that 144. You'll probably see a bounce there. And if that ultimately fails, then we're looking at that 18,300 as like, okay, that's like the last stop if you think the lows are in for this cycle. Breaking below that, I think we have bigger problems, and we're probably going to see that reflected in the overall market too, as the market probably heads to new lows on the stock indices. So that's kind of the big picture that we're seeing here for Bitcoin. So Bob, I know you have some, you wanted to talk about the Mara chart. Was there anything else on the Bitcoin price action you wanted to talk about?
Yeah, can we just go to the fair value chart for a second?
Yep.
Two things with that. One is, what's your preferred time horizon on looking at fair value? I know you showed weekly because you want to show people the extent of Bitcoin's life cycle. But, if you're trading it and somebody wanted to use this as a trading tool, would you look at it hourly, daily? What would your preference be?
I would look at it definitely on a daily. So as we got up into, because I was trying to calibrate this on what historically works. And so once I did that, that's why up here in the room, I said, we have a general like sell signal. And so because, the fair value is getting encroached on. So all of this price action up here to me that's where I was looking at, once we hit 25K, I was looking for, okay, what is price telling us up here? Because I knew we're at an area of reaction, right? So daily is what I like. And, then you can look at it, is this thing trending down or is it trending up? If it's trending up, you can ride that. But you just know that if you're going to run into this area here, it's probably going to kill your bear market rally. So I like it as a daily reference. And then when it gets down into this area, you just know you just got to like for your long term, this is more helpful for long term or hedging your stuff. But long term, when you get to that green line, regardless of what the price is, I don't care what the price is. This is just something that's worked in every single cycle from the beginning. And even if we're in this yield curve inversion, the reason why this works is it's so heavily discounted to what's going on in the underlying that this is like your snapback zone. Like think of stretching a rubber band. And I don't care if it's yield curve inverted or not. That's just telling you that this is overdone to the downside because Bitcoin's a very emotional, illiquid instrument and it gets overdone. It gets overdone to the upside, gets overdone to the downside. So yeah, looking at this on a daily, and the daily is helpful because you don't have to wait for the week to close. So you know immediately when it's starting to hit that. And you just start going to work on building that long-term position. And this green line, we're talking about holding through the next pump. Like this is like a couple year hold when you start getting down here for beyond 2025. So super powerful tool because the returns you're going to get from these signals are huge. You'll see 1,000, 2,000% type returns from playing this correctly.
Yeah, that's pretty incredible. And if you guys are interested in this tool, Phil's going to actually making this part of the portfolio that he sells in the crypto room. So you might want to put a comment in below saying, hey, consider me when this thing comes out, we can reach out to you. So very powerful tool. Phil is a maestro when it comes to trading Bitcoin and the altcoins. He's definitely worth listening to. And if he's putting tools together to keep you from FOMOing this stuff or to give you courage when you think you should be bailing, the tools that Phil has are priceless. But we did put a price on it. But so reach out to us and let us know when this thing comes out. He can reach out to you guys and put in a tool in your toolkit. Nobody else has this stuff, just us. So Phil, can we flip then to Mara real quick? Not to steal your great thunder for today. I always look at things from the stock side of it. And yesterday I went into BITI because of your warnings on overvaluation in terms of Bitcoin, and I want to be able to profit from that pullback before I go long again. But a lot of people like to trade Mara, and one of the things that we have on our system is that we like to look at the 2-day, because Mara, you can jump in and out of. I can show you a chart on a 15-minute chart, but this is more for people that want to buy Mara here in the low single digits and ride this thing up to 60, 70, and 80 when this thing goes. Is that we look at the 2-day chart. And we have what's called the range trader, that gray bar that you see where the green arrow comes down to, is that, look, unless you're just scalping, don't worry about taking and getting into a big position on Mara until that price level is breached to the upside. And Mara, Bitcoin is sensitive to liquidity and Mara is sensitive to Bitcoin. So it's kind of a little bit of a canary in the coal mine. And so if that range line will go down as price goes down, we could, in the worst case scenario, get Mara below the lows we had here a couple months back. So I just wanted to put that, and I'm just kicking back. When that thing goes, then I'm loading up what's called leaps, 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 out a year on some call options on Mara at the money and let this thing fly. But I'm not going to do it until I know the sell-off is done or the liquidity starts coming back in. And make no mistake, guys, the liquidity will have to come back in this market unless the Fed wants to put themselves out of business, and we know that's not the case. So once this pain trade is through, all this stuff's going to rock, all risk assets. So this is going to be a great one to own. And you'll get leverage to Bitcoin too. So, if Bitcoin goes up to 2x, Mars going up greater than 2x. So it's just a nice complement and a supplement to your Bitcoin holdings. So I just wanted to share that, Phil.
Yeah, and I'll throw in another tip with regards to the miners. And I'm a big fan of going investing in the miners. I think they're going to be those stocks will likely outperform most of the stock market when we get out of this bear market, just because of their ties to Bitcoin. But I think too, there's a bigger play with just Bitcoin mining in general. And I think you have to watch plays like TerraWolf and those that are aligning with nuclear energy, because I think that's where ultimately all of that's going to go. It's like that's the singularity for Bitcoin mining is nuclear energy. So I think whoever gets the majority of that mining power from nuclear energy is going to be a massive player. And really at the end of the day, when let's just say the world kind of gobbles up and holds Bitcoin and there's really no more on the exchanges, and that is a reality because there is a finite amount, and that amount on the exchanges continues to decline. So you're going to get to that point. Who's going to be in charge? Well, it's going to be the miners. You're going to have to, if you haven't gotten your Bitcoin allocation, you're going to be standing in line at the miners going, can I have my allocation? Because that's it. That's the only spot you're going to be able to get spot Bitcoin from. But that being said, one thing you can do with these miners is watch the hash rate. Now, this is just, this is an indicator you can get on TradingView. It's called hash ribbons. And basically what it does is it's just taking it's basically like a moving average curve of the hash rate on the system. But if you notice like the Mara chart, right, in August, before August, I know I'm kind of blocking that monthly label there, but before August, we had that run up, right? Now look at the chart with the hash ribbons. You notice we were in this redded shaded area. That's what they call minor capitulation. That means the hash rate was too expensive relative to the price of Bitcoin, and people started turning their machines off because if they can't sell Bitcoin to pay for the power, they'll turn the machines off. And typically what happens is the older machines get turned off first. And so it actually turns into kind of a buy and sell signal for the miners, the Bitcoin miners. So when this thing is going red, that's actually the time you start looking for, your technical entries. And that's where we use like the chart that Bob has here, because all these lines represent something. And when you get into that zone, so it's like a filter, kind of like, hey, a heads up, start looking for a buy on the daily or some of your higher time frames. So you'll notice that happened going into August, and then on the chart, you can see from August on, nice move up, sharp move up. Then you look at going into the beginning of 2023, we kind of had the same situation. We had that minor capitulation, and then it crossed up. So when this is happening, not necessarily after the cross, because by the time that buy signal hits, if you're buying and nibbling before that, you just don't want to be early. That's why you want to use the charts that we have. But you can time it with this, and when the charts say go, that daily chart says go, you'll beat this, and by the time that fires off, you're already in the money, moving your stops to break even and enjoying the trend back up. So this is a little tip you can use, the hash ribbon indicator on top of our charts, and really get a really sweet entry, because those things perform really well. Like Bob said, they're a great leverage play against Bitcoin. So just a little tip on the miners to try and finesse those moves. But yeah, other than that, Bob, that's pretty much it for today. Long term, very bullish on Bitcoin. Shorter term, though, I think we got just a longer bearish trend ahead of us and I don't think most people, Twitter and stuff like that, I don't think they're taking into account the macro as much as they should be.
Yeah, and then we'll get back to macro stocks tomorrow, and just some really interesting data points coming out that doesn't change our macro view at all, and we'll share those with you so you guys can be better informed. Thanks for listening. Hit like, hit notification, hit notify all the time, and like I said, if you're interested in Phil's fair value thing, he just finished it. Just put your comments below, and when it's released, we'll reach out to you and get it in your hands, because it's going to be a valuable tool for you, and what you're going to pay for access to that is going to be nothing compared to what you're going to get out of it in terms of saving yourself headaches and anxiety, and putting yourself in the right position at the right time to take advantage of, I think, a pretty explosive move coming in the future. Mm-hmm. So thanks for listening. Have a great day.
See you guys.
Trade Genius.